Here's your Forbes Daily Briefing for Wednesday, March 13th. Today on Forbes, the billion-dollar unraveling of the king of Silicon Valley. Ryan Breslow was dancing barefoot in a geodesic dome when his investors sued him last July. An aggrieved shareholder was accusing Breslow, the once billionaire founder of payments unicorn Bolt, of draining millions of dollars from the company by defaulting on a personal loan secured by its cash. The lawsuit alleged that rather than liquidate his shares to cover the debt, Breslow had allowed $30 million to be swept from Bolt's bank account. And when 3 board members insisted he repay the company, he forced them out instead. These problems were an ocean away in Ibiza, Spain, where Breslow was headlining a mindfulness retreat centered around dance and, quote, the pursuit of happiness. But back home, the suit was among a host of legal battles, bitter money squabbles, and shaky ventures that awaited him. Over the past 2 years, Breslow has repeatedly attempted to use his Bolt equity to take out large loans and has tried to expense 7-figure travel and security bills to Bolt after stepping down as CEO. This, according to internal documents, court filings, and interviews with more than a dozen friends, advisors, and colleagues. One of the companies Breslow co-founded after Bolt, an equity lending platform called Prism, claimed in pitch materials first reported by the New York Times that he had taken out a $100 million loan collateralized by his Bolt shares. But Forbes has learned that the loan was never approved. 3 individuals with knowledge of the situation told Forbes that Bolt's board confronted Breslow after learning of the loan attempt, saying the arrangement would be a violation of his shareholder agreement. A Prism investor deck, viewed by Forbes, listed Bolt as a, quote, signed launch partner, alongside Scale AI, Flexport, and Brex. Breslow declined to comment on the Prism loan and a detailed list of questions sent by Forbes, saying they contained, quote, too much inaccuracy. However, his October 2023 motion to dismiss a lawsuit filed by Connecticut-based venture fund Activant, one of Bolt's earliest backers, confirmed the $30 million loan's existence and terms, as well as his non-repayment at the time. For years, Breslow has personified Silicon Valley success with an archetypal story. A public school kid who dropped out of Stanford University to found Bolt, a one-click payments company that became a venture capital darling and raised $1 billion in funding, earning him a spot on Forbes' list of the world's youngest billionaires and a cover story. During this time when he was riding high, Breslow took out a $30 million loan in November 2021 with unusual terms. That is, if he were to default, Bolt would cover his obligations and could claw back some of his shares as repayment. By early 2022, Wall Street heavyweights like BlackRock and H.I.G. Growth had lined up to back a $355 million Series E funding round, valuing Bolt at $11 billion and Breslow's personal stake at over $2 billion. But instead of catapulting Bolt to new heights, the 2022 deal marked the start of a turbulent 18-month period for Breslow, pocked with acrimonious lawsuits and a showdown with venture fund Activant. In its July lawsuit, Activant alleged that after being told to reimburse Bolt for the $30 million loan, quote, Breslow quickly moved to the nuclear option, forcing out board members Steve Saraceno of Activant, Arjun Sethi of Tribe Capital, and Brian Reinken of Westcap, who had tried to compel him to make good on the debt. Sethi, Tribe, Reinken, and Westcap all declined to comment. Breslow has called the Activant litigation, quote, nothing more than sour grapes, over his, quote, unfettered right to remove members of the board, stating in his dismissal motion that, quote, he did not believe that those directors were the best people to help support his vision for the continued growth and success of Bolt. Meanwhile, Bolt's value, which makes up the vast majority of Breslow's wealth, has crashed. The company began buying back shares from investors and employees this January at a 97% markdown that suggests a valuation of around $300 million, 3 sources told Forbes. The offer, which has since ended, also required participants to release Bolt and its affiliates from a broad set of claims. At the time of the Series E round, Forbes reported that Breslow owned 22% of Bolt. At the valuation suggested by the tender offer, that stake would be worth an estimated $60 million. For full coverage, check out Sarah Emerson's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.